everyone, I'm Sarah. I'm the Associate Forecasting Director at Dodge Construction Network, and I'm here today to look over the February Dodge Momentum Index report. Quick reminder here, the DMI tracks the value of non-residential building projects as they enter their earliest stages of planning. We base this off of the 3-month moving average of those projects and only include projects that are valued at $500 million and below. This typically leads construction spending by about 12 to 18 months. So in the month of February, we saw the DMI pull back by about 7.3%, driven by widespread declines across most commercial and institutional sectors. You can see here that commercial fell back close to 9% and institutional building lost about 4%. So we know that the DMI is going to continue to normalize here after some of that really high growth that we saw in the back half of 2025. Now, digging a little bit more into the details here, you can see on the left we have the commercial portion of the index, both with and without data centers, and on the right you have the institutional portion. So we did see, the level of data center projects sort of slow down in the month of February. But on the commercial side, I would say we still saw kind of widespread declines across other sectors as well. Again, as those levels sort of normalize off of that really high level of activity we saw in the late part of that year. One bright spot this month was the warehouse sector, which continued to gain momentum, and retail stores continued to be up pretty high year over year, even though they did slow down a little bit this month. On the institutional side, healthcare is certainly continuing to prop up this index. So we saw a more mild decline of about 4%, and certainly stronger healthcare and recreational building activity is keeping levels relatively elevated here. Education continues to, again, normalize and kind of fall back much closer to year-ago levels than the other sectors. So overall, we continue to expect kind of more sustainable levels of growth in the DMI in the coming months. We know that, of course, there's continued volatility and economic uncertainty around labor, around costs, and, of course, geopolitical tensions as well. And so all of that could also be a factor here that's slowing down planning projects going into the pipeline, right, as owners and developers are sort of weighing those risks and perhaps feeling a little less confident in the near term. But overall, the pipeline does remain robust and should point to an acceleration in construction in the first half of 2027. All right, that's all I have for you this month. Thanks so much for watching.